Welcome into episode 9 of the Money Vehicle Movement podcast. Couldn't be more excited to have you back. Today, we are going to dive into the core curriculum, chapter 1.2, the Golden Rule. And for some reason, we're going to head out to a log cabin. But before we go out there, we're going to dive into some of these current events, starting with a possible credit card monopoly. Then we're going to ask ourselves, is testing going to become the new standard to enter college again? And last but not least, have we seen the last of Mint and what cash management products are going to be available for you to own your money buckets? Let's jump into story number one, where two financial giants want to combine forces, these two giants being Capital One and Discover. Now, anytime you see two financial giants deciding to team up, you got to ask several questions. One, that old saying, you can't beat them, join them. But two, what, why, and how is this going to impact you? Capital One announced it is trying to acquire Discover, as in Discover credit cards and Discover payment processing like Visa or MasterCard, where we learn in chapter 4 and 5 your bank is not necessarily sending the dollars. Visa and MasterCard is the payment processor. That is between the merchant and the card issuer. It has to travel. Discover had a payment processing system, and that is one of the reasons that Capital One is interested in acquiring them for more than 35 billion, B as in billion dollars. Capital One is going to purchase and acquire Discover for $35 billion. The company, Capital One, says it's doing so to protect itself against certain threats. As you've seen new financial technology, fintech companies, new payment processing options come onto the market. If you just think about the variety of ways you as a student are starting to transfer money and purchase things, you start to see this vast competitive landscape that Capital One is sitting and saying, how are we going to produce and compete in the future? That is why they look at Discover and say, yes, we want your credit card users, but we also want that payment processing system, which Capital One currently does not have. In the end, two large financial institutions are combining to make one very large financial institution and company in an industry that is filled with just larger and larger financial companies. Whether the merger actually happens will be seen later this year, possibly into 2025. So we don't know yet. And the Biden administration in particular has been much more stringent in antitrust and anti monopoly practices than previous administrations. As you look at this conversation in your classroom, you begin to ask several questions. One, what is a monopoly? A monopoly is when one group begins to own a market. So if there are four competitors and they combine into a single competitor in the market, they now have complete autonomy and control over that market. When you hear the Biden administration being anti monopoly, it is because they want that form of competition. How you can discuss this in your classroom? Well, this is an example of that industry consolidation. And generally, that's bad for you, the consumer. Bad for me as well, but we're talking about you right now. When there are more companies in a given industry, there's more of that competition, meaning that those companies are going to compete for consumers and customers by offering lower prices, better products, better service. If I'm the only shop in town, I don't have to give you very good service because where else are you going to go? If I'm the only shop in town, I can charge you whatever I want because where are you going to go? When companies like this combine, it reduces competition, creating that monopoly, and it may lead to higher prices or worse products or services, like we just mentioned. This is why monopolies are generally considered a bad thing. Think about that game we used to play as kids, Monopoly. What was the goal? The goal was to rule the board, to control everything. So everybody paid you and you set the terms. Everyone else was dictated by you because you were the monopoly, you were the owner of it all. That is not a great thing for our market. While many companies see it as a massive advantage, us as consumers must begin to wake up to the reality. The more consolidation, the more these acquisitions, the bigger and bigger the trillion-dollar companies get, the less and less there is those middle markets, the less there is the options, and the less you are going to be the focus as the consumer. So, some questions for your classroom around this credit card monopoly. Why could a merger of this size be considered a bad thing for the market? And why could it be a good thing for the market? Is there competing answers to those two? Could you name some of the biggest banks in the country? As you hear Capital One, as you hear Discover, what are some other financial institutions, financial payment processes? What are some of those fintech companies that are starting to compete and make Capital One so afraid of losing you as a customer? Do you use any other services? Again, what are you using to make payments, to transfer money, to exchange with friends, or purchase things? And last but not least, do you know what a monopoly truly is, or what the term antitrust is actually referring to when we start talking about uncompetitive markets? Have a group discussion and really dive into antitrust, anti monopoly, and how it is going to benefit or hurt you as a consumer, you as a new product. And remember, these companies are making these moves to get you as a future client.